A report presented at the Climate Summit suggests that about $1 trillion are needed each year.
So here's something wild that nobody really talks about. Every year we see these massive disasters on the news, right? Wildfires tearing through California, hurricanes flooding entire cities, people losing everything they own. And you watch it and you feel terrible for these people because, how could you not? But here's the thing, while all of this is happening, while people are literally running for their lives, there are companies, investors, Wall Street executives who are making money, like serious money. We're talking billions, maybe even trillions of dollars. And I know that sounds kind of crazy, maybe even a little conspiracy theory-ish, but stick with me here because this is real. This is documented. There's actually a name for it, disaster capitalism. And once you see how it works, you can't unsee it. Okay, so let me break down what disaster capitalism actually means. Basically, it's when private companies and investors profit from disasters and crises. And I'm not just talking about like construction companies rebuilding houses, which, makes sense. I'm talking about a whole system where disasters have become this massive business opportunity. Think about it like this. When a hurricane destroys a city, that's obviously devastating for the people who live there. But for certain companies, that's a market opening up. Insurance companies collect premiums for years, and then when disaster strikes, they're in a position of incredible power. Investment firms buy up destroyed land for pennies on the dollar. Private contractors get huge government contracts. The stock market actually responds to these disasters in ways that make some people richer. It's like, imagine if every time something terrible happened, there was this shadow economy that got stronger. That's kind of what we're dealing with. Let's start with insurance, because this is where it gets really interesting. Now, you'd think insurance companies would be losing money during climate disasters, right? Like, they have to pay out all these claims for destroyed homes and businesses. But here's what actually happens. Take California wildfires, for example. Between 2017 and 2018, there were these massive fires, the Camp Fire, the Woolsey Fire, that destroyed entire towns. Paradise, California, was basically wiped off the map. More than 18,000 structures burned down, and insurance companies paid out about $12 billion in claims. That sounds like they lost money, right? But here's the thing. After those fires, insurance companies did something really calculated. They massively increased premiums across the state. We're talking 30, 40, sometimes 50% increases. And in the highest risk areas, some companies just pulled out completely. They basically said, yeah, we're not covering you anymore. You're on your own. So now you've got the situation where State Farm, Allstate, these huge insurance companies, they're leaving California. And if you think about it, they've collected premiums from people for decades, right? Decades of monthly payments. And then when things get bad, when people actually need that insurance, these companies just leave. They take the money and run. And here's the really messed up part. In 2022, even with all these disasters, the insurance industry globally made record profits. We're talking about companies like AIG, Chubb, Swiss Re, posting profit margins that were higher than before all these climate disasters started getting really bad. How does that even work? Well, they're changing more, covering less, and in many cases, they're actually betting on disasters through something called catastrophe bonds. Okay, this is where it gets kind of dark. Have you ever heard of catastrophe bonds? Most people haven't, but this is a real thing. Basically, these are investments where you can literally bet on disasters happening. Here's how it works. Insurance companies need to protect themselves from massive losses, right? So they create these bonds that investors can buy. If no disaster happens, the investors make money. They get a return on their investment. But if a huge disaster does happen, like a Category 5 hurricane or a massive earthquake, the investors lose their money, and that money goes to the insurance company to help cover claims. Now, you might think, okay, that seems like a reasonable way to spread risk around, but think about what this creates. You now have investors, hedge funds, wealthy individuals who have a financial stake in disasters. The catastrophe bond market is worth about $40 billion now. That's $40 billion essentially betting on whether disasters will happen or not. And some investors specifically look for these opportunities. After Hurricane Katrina in 2005, which caused $125 billion in damages, the catastrophe bond market exploded. It tripled in size. Investors saw what happened and thought, hey, this is profitable. There are literally hedge funds that specialize in this stuff. But it gets even worse. Let's talk about what happens after a disaster, when everything is destroyed and people are at their most vulnerable. So picture this, a wildfire comes through, destroys a neighborhood, families lose their homes, their lives are completely upended, they're dealing with trauma, insurance claims, trying to figure out where they're even going to live. And while all that's happening, there are these private equity firms and real estate investors who swoop in and start buying up the land. This happened in Paradise, California, after the Camp Fire in 2018. The fire killed 85 people, destroyed more than 14,000 homes, and within months, there were reports of out-of-state investors calling residents, offering to buy their burned properties for way below market value. People who were traumatized, who didn't know what to do, were selling their land cheap just to get out from under the burden. The same thing happened after Hurricane Katrina in New Orleans. In the lower 9th Ward, which was one of the hardest hit areas, there was this massive transfer of property from local residents to outside investors. A lot of the people who lived there were black families who had owned their homes for generations. After the flooding, they couldn't afford to rebuild. So what happened? Investment firms came in, bought the properties cheap, and eventually either flipped them or held onto them as the area slowly gentrified. There's this company called Invitation Homes. It's actually one of the biggest single-family home landlords in the United States. They manage over 80,000 rental homes, and they've been really active in disaster zones, buying up properties after wildfires and hurricanes. The business model is pretty straightforward. Buy low when people are desperate, then rent out the properties or wait for the market to recover and sell high. If you think about it, it's like these disasters are creating this wealth transfer from regular people to investors and corporations. People lose everything and someone else gets richer from it. Now let's talk about government contracts, because this is huge money. When a disaster hits, the federal government steps in with relief funding, right? FEMA shows up, they're supposed to help people rebuild. But a lot of that money doesn't actually go directly to people who need it. It goes to private contractors. After Hurricane Maria hit Puerto Rico in 2017, which was absolutely devastating, like the whole island lost power, thousands of people died, FEMA gave out contracts worth billions of dollars. And some of these contracts went to companies that had no experience with disaster relief, no connection to Puerto Rico, but they had connections in Washington. There was this company called Cobra Energy that got a $200 million contract to restore Puerto Rico's power grid. $200 million. And they did such a bad job that the contract eventually got cancelled. But by that point, they'd already been paid tens of millions of dollars. Another company, Whitefish Energy, which is this tiny company from Montana that had only 2 full-time employees, got a $300 million contract. How does that even happen? The same pattern shows up after every major disaster. After Hurricane Katrina, there were billions in government contracts. Companies like Halliburton, KBR, Bechtel, these massive corporations with political connections got huge no-bid contracts to do reconstruction work. And a lot of these contracts were plagued with problems, cost overruns, work that wasn't completed. It's like disasters have become this opportunity for well-connected companies to make guaranteed money from the government. And meanwhile, the people who actually lost their homes are still waiting for help. Here's another angle that's kind of interesting. As climate disasters get worse, there's this whole new industry forming around climate resilience and adaptation. Which sounds good on the surface, right? We need solutions to climate change. But if you look at who's profiting from this, it gets complicated. There are companies now that specialize in wildfire prevention, hurricane-proof construction, flood barriers, all this stuff. And these companies are getting massive investments from venture capital firms and private equity. There's actually a term for it, climate tech. And the climate tech investment market is worth over $40 billion now. Now, some of these companies are probably doing genuinely useful work. I'm not saying they're all bad, but the business model depends on disasters continuing to happen. If climate change suddenly stopped being a problem tomorrow, these companies would lose their market. So there's this weird incentive structure where the worse things get, the more valuable these companies become. You can see this in the stock market too. After major disasters, shares in companies that make building materials, construction equipment, disaster recovery services, they go up. After Hurricane Harvey in 2017, which caused $125 billion in damages, stocks for companies like Home Depot and Lowe's jumped. USG Corporation, which makes building materials, saw their stock rise. When Puerto Rico got hit by Maria, shares in Generac, which makes power generators, went up 8%. So you have this situation where the stock market is literally responding positively to disasters. Investors see a hurricane destroy a city and think, great, that's a buying opportunity. You know, if you step back and look at all of this together, it's kind of unbelievable. We have insurance companies that profit by raising rates and denying coverage. We have investors betting on whether disasters will happen. We have private equity firms buying up destroyed property from desperate people. We have contractors making billions from government relief money. We have an entire industry that depends on climate disasters continuing. And here's what really gets me. All of this is legal. This isn't some underground black market thing. This is just how the system works now. Disasters have been monetized. Human suffering has been turned into a market opportunity. The numbers are just staggering. The global disaster insurance market is worth over $100 billion a year. The reconstruction and recovery industry is worth hundreds of billions more. When you add in all the secondary markets, catastrophe bonds, climate tech, real estate speculation, you're looking at close to $1 trillion tied up in disaster capitalism. $1 trillion. That's more than the GDP of most countries. And it's all built on the back of people losing their homes, their communities, sometimes their lives. So what does this actually mean for regular people? Well, it means that the incentive structure is completely backwards. The people who have the power and the money to actually prevent or reduce these disasters, insurance companies, investment firms, corporations, they're not incentivized to do that, because if disasters stopped happening, they would lose money. Think about insurance companies. If they really wanted to reduce risk, they could refuse to insure properties in high-risk areas unless those properties met strict safety standards. They could invest heavily in fire prevention, flood barriers, climate resilience, but that costs money. It's cheaper and more profitable to just raise premiums and pull out of risky markets. Or think about private equity firms. If they really cared about communities recovering from disasters, they could work with local residents, help them rebuild, keep property ownership in the community, but that's not as profitable as buying cheap and selling high. The system isn't designed to help people. It's designed to extract profit from crisis. So yeah, that's disaster capitalism. That's how we ended up in this place where wildfires and hurricanes and floods aren't just tragedies. They're business opportunities, where human suffering has been turned into a financial instrument that you can trade on Wall Street. And the really scary part, as climate change gets worse, as disasters become more frequent and more severe, this whole system is just going to get bigger. More money flowing into catastrophe bonds, more investors buying up destroyed land, more companies profiting from reconstruction. More inequality because the people who can afford to protect themselves will be fine and everyone else will be left behind. I don't know, man. It's one of those things where once you see it, you can't stop seeing it. Every time there's a disaster on the news now, I find myself thinking, okay, who's gonna make money from this? Who's profiting while these people suffer? And maybe that's the real question we should all be asking. Because until we change the incentives, until we build a system that actually prioritizes people over profit, this is just going to keep happening. The disasters will keep coming and the money will keep flowing. And in the end, the people who need help the most will be the ones who get left behind. That's the $1 trillion climate crisis. That's disaster capitalism, and it's happening right now, whether we want to see it or not.